I hope you're having a good weekend, and thank you so much for clicking on my video. I really do appreciate it. Now, what we need to figure out for next week is Monday. What is going to happen? I think this is a very important thing to see here. These divergences down here on 2-hour charts, we see those on the MACD, we see those down here on the RSI at the same time, a little bit flat, but are these actually going to head to the upside? That's what we're going to get into today as we look into the shorter time frames for the SPY cues, Apple, Tesla, Amazon, Nvidia, AMD, and Meta, looking at GME and AMC as well. One thing to note about that dollar dropping off, we were talking about over the weekend how this could be some insider buying happening behind the scenes. Well, the only other option for that, and something that I think we could be aware of, is if we do see AMC and GME pump, that could mean that this might have been buying into those stocks. But I think that it is more likely that we are seeing insider buying and we are going to see some kind of base after some trickery. I think there will be some trickery in the market because this is behaving a lot like a bear market, and we do see these type of signals in a bear market very often. If you're looking to learn how to trade this style, how to trade around these weekly moves, how to spot divergences and trade like a bear market, pretty much in any market, there's a course down in the description, guys. The course is 90% off. It is $100 just for the month of August, and then it is going away. So just a little bit more time. The sooner you get it, the sooner you get the knowledge, and you can benefit from a choppy market like this one, where that course really will help you make the maximum amount and tell you where that risk is and convince you really to start trading like water. Now, the thing we need to figure out, we have a bunch of 2-hour divergences on a ton of charts that we're going to look at today. The big thing we're going to tackle is this a strong enough base to actually head up from here, right? Is it strong enough to really push us to higher levels? And I think that's what we're going to see on Monday, and I'd pay attention to that. But if we see this actually rotate down, a lot of the time you need a 30-minute divergence underneath these 2 hours, especially in a bear market, to have this actually play out to the upside, and then we can curl up that daily chart like we talked about in Saturday's video. So what we really want to do here is, first of all, give you guys those weekly expected moves and the daily expected moves for Monday for the SPY. We have, for the weekly expected moves, these purple lines here, 548.29 to the upside, and we do have 517.51 to the downside. Okay, so this is what's priced in for the options market. Pretty big range for the week. So those big swings are still here. Volatility is still higher, and that is showing itself in the daily expected moves as well. As you can see, the daily expected move, we have 540.28 to the upside. We do have 525.52 to the downside. Key thing to note, we are also by the monthly expected move bottom side, and we're only a few days into the month of August, so it is more likely to see a bounce over time throughout August from these type of levels. Doesn't mean we can't crash. We have to pay attention to those scenarios, but today we're going to talk about if we could bounce from this base right here, and how we're going to do that is overall looking at a 30-minute chart. We see this 30-minute chart here. A lot of the time you'll need, for some kind of bounce, some kind of divergence down at these levels. If we kind of zoom back into the past, you'll notice there are times where at certain lows we do see divergences pop up. So we come back down to this very pivotal low right here. We'll come down to this pivotal low right here, and you'll notice, what do we see along the bottom here? Well, we see some divergence to the upside. So we're looking for something like that. Even here you had a rejection divergence that led to upside. We might need that in order to create that stronger base. With that dollar dropping off, what we want to see here, are we going to see a rapid move that gets that 2-hour to really cross back up into positive territory, right? Crosses that 2-hour right away. Because if not, we might need to buy some time, create that stronger base, see that reaction up outside of this daily expected move, and then curl back down, right? And that would lead to maybe creating that divergence that we're talking about. See this 30-minute get close to that center line, rotate back down, and then be able to curl back up. And then this is the actual timing for that big move. Remember, price is not necessarily the most important thing. Yes, you want a good price, but your timing on something can really be everything. If you see this kind of signal down here, well, then that is a high probable move to turn up your 2-hour chart. And the thing about your 2-hour chart is you have divergence there as well. So this is showing as a bear market. This would be showing itself in regular bear market activity. This would show itself as some kind of basing out. So the other thing that's kind of fishy here, volatility just screaming higher while this is setting up. So we'll pay attention to it. We have to wait for these to confirm. I think I am leaning towards us seeing a rapid move up, creating that stronger base for another fake out, and then we start to head up higher over time towards the end of the week. That is just something that I'm leaning towards at this moment with how things are shaping up. So as we look at the Qs, we can see that divergence there, even steeper on the Qs, but is this a strong enough base to head to the upside? We're going to talk about that on the 30-minute chart here in a moment. But first, we got to get you those weekly and those daily expected moves. So the weekly expected moves here in purple, 467.39. Remember, 68% chance to land back in this zone right here, pretty big zone. And then to the downside, we do have 430.11. This is what's priced in by the options data. This is the calculation I do every week. And this has really been good to us over time. We can see when things are going to get a little crazier. We can see reversal signals around it and see if that's going to fade back down. So as of right now, is this 2 hour going to be able to just powerfully turn up into positive territory, which usually shows that daily chart can turn up for the swing trade. So we want to pay attention to this. But is this right now a strong enough base down towards that monthly expected move? Well, we'd have to see if we're going to get a bounce maybe towards a daily expected move, which happens to be 457.94 to the upside for the Qs and 439.56 to the downside. So what we want to pay attention to here is a lot of the time 2 hours need some kind of 30-minute divergence to turn up. You see them a lot when you want to turn up the 2 hour. You guys know 30 minutes and 2 hours are my favorite charts for the shorter time frames. And what do we notice down here? We do not necessarily have that divergence. Now, you could say if you zoom way out that you might have some flatness, you might have some upward move here from this area, but sometimes you have to make it in the nearest price action. That's really what I'm leaning toward going into this week. We see some kind of move up, maybe to fill a gap, and then we actually see that fade back down, and then we see that big move over time. So this would curl up to that center line, curl back down. Hey, that's just a simple move down, simple swing trade type style move, continuation of the trend. And then if that's able to curl up, well, then you got yourself some divergence down here for the 30-minute. If that can form, then you have a very good shot to turn up that 2 hour. If we can hold that divergence and that divergence stays true and we don't just fall through the floor on this drop, we actually create that divergence. You can see this as a strong base. All right. So if we're able to do something like this and this isn't able to cross, right, it's kind of quick, that would be something to pay attention to. So the other side to this is if that 2 hour is able to cross and it's a little stronger, right, if this actually does cross, then we might not go make that divergence. So I just wanted to point that out, but we will be live tomorrow morning to watch it with you. I believe Monday is very freaking important and we need to be paying close attention to it. So please join us live. Make sure you're subscribed, make sure those notifications on, and like this video so more people can see this and can join us on those live videos. Now, we do have some stocks like this that are Apple and things like that. Apple actually showing you something up here in the shorter time frames that can curl over this 2 hour. So we have to pay close attention to Apple. A little bit flaggy still in this area. And we came up to that 225.84. Remember, 225.84 is what I really think we need to take back in order to head higher. Okay. But right now, we do see some signals in here that could rotate over that 2 hour. So we really want to pay attention. If this 2 hour is able to rotate over for Apple on Monday, we could head towards a weekly expected move and then see that divergence show its head again on another stock. But for now, I just wanted to show you the reversal signal Apple is seeing. Now, this one I am skeptical of as the market looks like it really wants to bounce for Monday. So we'll pay attention. We have new weekly expected moves posted on Patreon. That link and the course links, they're all down in the description right now. I'm just going to leave the $100 one there because I believe that one's the most important for now, but there are swing trading courses as well. For now, I just believe that's the one because that one's going to teach you how to see setups like this, right? And see that downward push. And now you have a high probability to go negative here, but we'll see as that is still positive if that can whip back around because of how a lot of stocks are shaping up. So if that 30-minute was to continue down and go negative, hey, you're going to cross this 2 hour. Be aware that if this 2 hour crosses, negative territory is there. You can beat all these lows, go head to a new one, and then see if you're able to base out with some kind of divergence. That's what I would be paying attention to for Apple this week. Tesla, a little bit of a different story. So this is where I'm saying a lot of stocks showing those divergences in areas for me that I like to pay attention to. A pretty important area here, one of my zones. So as you get above that, right, we gap out of it. Okay, now we can use that as support to maybe head higher, and we're creating a 2 hour divergence by it. Now, the only problem with a lot of these stocks, yes, 2 hour divergences can turn up those dailies. We could see that swing trade, and we could start to head to a new high here for Tesla over time throughout August. But in order to do that, maybe we need to create a stronger base. You're noticing that Tesla looks a lot like the SPY and the Qs, and a lot of the ones with divergences look like they may just need a little bit stronger of a base, which would just tell me, hey, maybe this sees a reaction up, curls right back down, and then we actually see that create some kind of double bottom down here, giving us that little divergence that's close to going positive here. That would be the most likely time where you're going to see the 2 hour have a good shot to turn up. So I think that is possible going into Monday. But as always, it is important to understand if this 2 hour is able to fully cross up, you can see this cross up and get that positivity, consolidate positivity again right away. So we don't have to go create the stronger base. It's just something I'm leaning towards at this time. I believe bear markets are there. Even though this isn't a bear market, it's behaving a lot like one. Bear markets are there to really rip it around, and that's the kind of price action we're seeing right now. It's meant to hurt as many people as possible. So right when you think this is recovering, it could just turn down to create that stronger base. So managing the risk will be huge, and we do have that in the $100 course down in the description. It's only $100. If you're wanting to learn how to trade in an environment like this, I'm really going to push that throughout this week because it is very, very good to learn how to trade in this kind of behavior as volatility is higher. So really, you just want to see, is this 2 hour actually able to curl up? That will be more of a signal that you're about to see the daily swing trade. Just note, I am more leaning towards us seeing some kind of stronger base before we can actually head higher. We'll pay attention in the future because just to point it out one time here, the daily scale, we are turning down on a lot of these charts and they're about to go negative. So if we don't see any positivity come Monday, this thing could just be falling through the floor. I'm not leaning towards that with how the dollar is behaving, but I just wanted to point that out on at least one chart here, even though we're going to be mostly talking about some possible upside plays. You still want to be aware, manage the trade. You still want to be aware that the direction for right now on a lot of stocks is negative. You're in negative territory, so you can keep heading down at any moment. I'm just trying to look for those reversals because I believe there might be some kind of rigged move happening early on in the week that leads to a divergence down there. Now, something that's a little bit different is going to be Amazon, right? Amazon is something that personally, when I see a trade like this and I just see a big drop off after earnings, I'm waiting a lot for that to see that price action, see that MACD get up to that center line, and then make a decision based on what's happening towards that center line. Because if this curls up, even goes sideways for a little bit, hey, you can get that 30-minute close to that center line and see another drop, and maybe we actually do make, actually I would say, I'd maybe say even a higher low for Amazon would be possible. If you see a strong move on Monday, a higher low could be possible just because of how low this came down. So I don't know, unless this is able to rotate over very quickly, but for Amazon, I believe a higher low would be a good scenario to pay attention to. As always though, when this does curl up, or if this does curl up as it is crossed on that MACD, if this gets to that center line and turns down, crosses back over, and you start to see these red bars on the histogram, you have to treat that as, hey, that's horrible, right? You have to say that's really, really, really bad. But if it gives me some kind of higher low, then I can still react to that. But the initial push down, you could just be continuing a negative trend if we're seeing some major downside. So it doesn't mean, hey, if we're turning down, we have to create stronger bases. It more so means, oh, this is going to be very bad if it turns down. We're in negative territory. That's bad. But if it does turn back around, I'm aware of how these stronger bases can be set up in case there's another move to the upside. As we go over to Nvidia, this is one that I actually really like. I think you have some double bottom divergences down here for the 30-minute. Very, very significant on the RSI down there. So this has actually turned green. It's broken out of the zone. We break out of it. We test back in it. And now we go again. This is a good sign that we're going to see a 2 hour cross up. What's the thing about the 2 hour here? Well, it has some major divergence right here for the 2 hour. So we could be seeing some good positivity from Nvidia right out the gate because we actually do have that stronger base for the 30-minute. That's why we want to be aware of other charts. If they're just curling up on 2 hours right away, not creating those stronger base, we need to be able to react. So Nvidia actually looking like some potential upside is there. Obviously, we need some more price action. This has not curled up yet, so this is not a guarantee by any means. This is not a high probability until that curls up, until we see that positivity. But it's good to have a 30-minute divergence in here as well to tell you, hey, this does have a good shot to cross at this moment. And Nvidia actually could see the daily scale turn up over time here and maybe even get back to positive, a little bit less or a little bit more likely to see a lower high before the earnings. But earnings is just that, it's a 50-50 flip. So we're more paying attention to these signals before earnings, and then we'll treat earnings with a little bit more caution. AMD, this one as well, just like Nvidia, showing a pretty good amount of divergences here. Now that 2 hour has not curled up. Does it have potential to curl up? Well, the 30-minute, you're just noticing in the near price action, we're kind of trying to build it back up. And you do have some divergence down here on the 30-minute to pay attention to. Yes, we have kind of flattened out right here, kind of pulling back, But between all these lows, you can kind of see how we're still seeing that upward trajectory here on the MACD. We're seeing that down here even on the RSI at the same time. So if we're able to use that deadness and momentum to really curl up here and then curl up that 2 hour, we may see a momentum play to the upside for AMD. So I just want you to be aware that we are seeing some potential reversal signals, even though the trend is overall negative. So if this 30-minute was to rotate down, the most likely direction for AMD would be downside, okay? Meta, this one's doing exactly what I said kind of about Amazon, what I like to see after earnings. We see a massive move, then we see that 30-minute at least pull back to the center line. If that can curl up, simple thing here, curls up, gets above the moving averages, curls up on the MACD, goes above the center line for the RSI, we can see another move higher. We have those weekly ranges in case another big move comes. So I'd be paying attention to that. This is more what you want to see after earnings. You be patient, see that thing turn back up, see this turn up on the MACD and say, okay, that is a confirmation of another positive move here, maybe to set up some kind of divergence or something like that. We're going to pay attention to the signals very, very carefully. If we see too big of an upward move early on in the week, and we get outside those weekly moves and we see some reversal signals with them, that actually could be the sign of it just a prolonged dead cat bounce, and we'll pay attention to that with you live as well and tell you what's forming with the price action. As of right now, with something like Microsoft, I know that this looks really bad. We're breaking through that very strong trend line, right? So that channel, we actually do see divergences down here on the RSI, okay? You do see that upward move on the RSI that kind of goes flat, but you do have it there for the RSI. You have it across for the MACD. As we look at a 2-hour chart, what are you noticing? Well, they do have a divergence down here. We have it, it's just not in the best place. So if we wanted to, we could even see a big move for Microsoft that dips back down and makes a stronger base on a 2-hour. So we really have to pay attention to the signals closely. This is the time when volatility is high. My strategy is the course that can really help you make good money. But at the same time, you have to be willing to, be adaptable, trade like water, be willing to flip the script, take profit early. You're going to see bigger moves as that volatility is higher, and we know that. So therefore, let's benefit from that and make sure we're benefiting from that by taking profit. That's just one tip that I would give as far as how I do things. Taking profit is a great thing, and we give you tools like weekly ranges, daily ranges in order to do that on Patreon, which is down there in the description. Now, as we go over to AMC, something kind of bad happening here for AMC is going to be the 2-hour crossing down into negative territory, okay? This is crossing down and going negative, so the most likely option for AMC early on in the week is going to be downside. The earnings stuff they've put out, I think, have all been pretty dang good. I think all of it has been pretty dang good. So that just tells me, there is reason for this to head higher, and the debt is being restructured, which is great. So I really don't see why this is so negative anymore, why it's just $5, besides the fact that every Friday they beat it down and try to get it as close to below $5 as possible every single Friday. So you have to know that every single week, even if this does see a big pop on Monday, if you see that starts to turn down, well, then they're most likely trying to close that at lower levels, trying to close that below $5 by the end of the week. So just pay attention to that. But for now, your most likely option for AMC early on in the week is downside. Now we're going to give you that gamma level right now. I'm going to go update that in real time so we can see how high AMC needs to get in order to see some kind of gamma squeeze. And the unexpected area here, notice it's right around the wick, so similar area to last time when we almost broke out. This is a very key level, as you can see. So if we're able to close above that, that would be more of a signal of something unexpected happening, something that's not expected by the market maker. And this is the level you need to get through next week. 573 is what you need to get through next week and close above in order to see that positivity. If you're able to do that, you're going to be on the daily scale closing firmly above the 200, which would be a very, very nice signal to get above all these moving averages as the Bollinger Bands are pretty tight. We are still positive here for AMC, even though it's pointing down. If that starts to go negative, we could see more work to be done over time. GME, as we switch over to that, we're seeing a similar thing. You're already going negative, which is a bad sign for GME, so they're really fighting the stock. But at this moment, if you can just curl up the daily at any time, remember down in these areas, you curled up the daily, what happened? A lot of positivity. So if you curl up the daily right here on this MACD, right, this just does this. You see a little green bar, that can mean some prolonged positivity is coming. And we're going to update those lines for you right now real quick. So we do have 23.39 to the upside. So that's going to be the key level to pay attention to. Yep, 23.39 to the upside is going to be the key level to pay attention to. That is what they would not be expecting. And for the downside, 1875. So we're just giving you it for GME as things are getting really tight, starting to kind of, move to the downside. So we'll pay attention, but a lot of the time you can, when these are starting to spread out, right? You can see that reaction down and then it zips the other way as volatility gets bigger in the stock. So you'll have bigger swings if you get that swing to the upside, aka if this daily can cross. You notice if that daily just did that, you'd be doing what? You'd be getting out of the expected area, right? So this would be something unexpected happening. That's exactly what a gamma squeeze is. So if you want to see some kind of gamma squeeze out of this, well, you got to get above 23.39 for GameStop. The only problem with a lot of this is the 2-hour has not curled up. It's been going down for a long time. The 30-minute has tried to make reversal signals, but keeps going down over time, keeps crossing over, continuing that negative trend downward. So in order for this to really see some positivity, that thing's got to go positive for the 30-minute. 2 hours got to cross, daily's got to cross, and you'll be in business. Now, we were talking about volatility a lot yesterday. I wanted to show you how the 30-minute has crossed down. Okay, the 30-minute has crossed down. You're starting to see this react downward. Look at the 2-hour. If that 2-hour can cross down, you might be in a prolonged upward move. We'll pay attention to that. Right now, we want to see going into Monday, if we do see that positivity, look for if this 30-minute gets down by that center line and just curls up into positive territory. We could be hitting a daily expected move as we retest 20. In the SPY, you can hit that daily expected move upside as volatility comes down, and then you just see that cross back up in positive territory, and that would be a sign that you're going to see some kind of dip in the market. So we will pay attention to that with you live. Now, the key thing to remember here is the daily has seen a major thing happen. You're closing above the 200 a ton. If that 50 can cross that 200, that is a pretty good crash signal, right? That is a crash signal if we can remain above the 200 with that 50 over time. So if we see that react down, if we get this to cross down, we may have a prolonged few weeks where we actually see buying in the overall market, and then maybe September is where we need to pay attention to if that gets down to 12.12, for some kind of squeeze or something like that. I want to be open to that. If that happens, we actually can see volatility take off as it gets retests of key areas. So we'll pay attention to this for you. We'll look for those reversal signals, but for now, if that 2-hour can cross down, that's kind of your first indication that we're going to see something a little bit bigger. If that doesn't cross down, if it fully doesn't cross down, that's where you want to see if the 30-minute is able to just base out maybe around 20 and then curl back up into positive territory. And that would most likely mean, hey, we're going to go make that stronger base, and we might see volatility create a reversal signal in here while the SPY creates the same signal on the 30-minute. That's what we will be paying attention to, very heavily paying attention to come Monday and Tuesday, actually. Now, for the overall dollar, right, we just wanted to notice that this looks like insider buying, and that's the main take from here. We'll see if this changes going into Monday or overnight tonight. If I see something kind of fishy, I will be posting that to Patreon and trying to keep you as aware as possible going into the morning. So overall, it just looks like a time where everyone is getting those recession scares in. Over the weekend, we talked about the times where we've seen pullbacks like this, where people got overzealous to the downside. As we know, with uninversion, sometimes you can buy yourself 6 to 18 months and see upside for those 6 to 18 months before we overall see a crash. And I think that they do want to steal as much money away from retail as possible, so they're going to make this a little complicated. We're going to watch the signals closely with you when we're live. So make sure to come back, ask questions about the course, ask questions about a stock. I love looking at stocks with you guys. It's a lot of fun, and I would really look forward to it. So thank you for making it to the end of the video. Remember, those things are down in the description for the course and all those things if you want to learn any of this stuff, if you need a little extra help and things like that. Well, Patreon is there to give you some extra tools and things like that. And we're going to be adding live videos on Patreon soon once I can test it out if it's good enough. So thank you so much for watching. Really appreciate it. Hope you had a good weekend, and I'm ready to trade some stocks this week. It's been a lot of fun, and I look more forward to having some more fun with you guys live. All right. Hope you guys have a great night. Good luck with your trades going on into tomorrow. Hopefully this video was helpful, and peace.